Hey, good evening, guys. Ken at Tortoise Capital. This is cohort one, small group coaching for July 1st. Hard to believe, July. Where did this year go? I check in real quick. I had a really good 90-minute session with Chris White of EdgeRaider. He has a Excel-based toolkit where he's built some of the templates for sniper trading and for the mechanical swing systems and for the auto framer. It has a back testing function on it and a bunch of other templates from other much more well-known traders than me. But we did about a 90-minute session. He sent me the link for the recording. I thought it went pretty well. Did a nice job of being able to summarize, I think, what our posture and edges and attitudes consist of. It's nice sometimes to start with a absolutely fresh new audience to force you to get right to the point. So I'll make that available later. Let's see. There was some other thing I did that was good. What the heck was it? Oh, the prompt engineering. I finished up the book on that. I'll get that sent out to you here shortly. Yeah, there was really good feedback from his group of traders on the confident communications model, which I realized in the middle of making it was actually a professional development model, and it was the basis for the coaching session I did with Hamad last week, and he has since sent me his monthly report. He did such a nice job on that I really think it's pretty good template for what a monthly roll-up ought to look like. And my spider sense is that you guys are all far enough along that about monthly, I think you need to be doing the same thing. I'm going to cover it later tonight if we get some time. I posted it in Patreon, but I'll cover it briefly tonight if we get a little bit of time. And I think it's a nice way to sort of go to the next level of systematization, if I can say it that way. So that's what I got going on. All other things going well. And let me turn it over to the team. We got a full house tonight. Tahoe.
Hey, Ken, I have a quick question for you about that
Sure.
video.
Yeah.
Effective communications, and I think you mentioned in there's, public speaking.
Yeah.
Where are we with AI to the point that a course could be developed where the AI is actually talking to people and prompting them and then analyzing speech?
Oh yeah, it's already there. I've already done that. That was a briefing that I gave to Army University last week, and it was one of the keynote speeches, and I was demonstrating the technique of iterated dialogue with AI and how to produce good prompts in a series of recursive improving dialogue. In fact, I wrote that book on Friday with the use of AI to help me write a book on using AI. And the idea is that I started off just kind of making question and answers with it. And then what I've done is I've learned to develop the context of the project early. Like what I have now is a page-long set of instructions that describes my ideal audience that I'm writing a book for. I tell it, hey, we're going to write a book together, and the audience that we're writing for has the following 20 characteristics. And so we need to be able to write in a tone that is suitable for them to help them make the decisions that they're going to make. And it says check. I've refined that over time. So now that's part of a library of context reference. The audience is always this, and it's an audience that constitutes Army organizational leaders, including general officers, but also professional traders and professionals who are traders, such as us. And then I say, look, when I ask you to make recommendations for me, I want you to act as a chief of staff and a set of 20 expert staff members. And the 20 staff members include I've written a profile for each one of those 20. Like there's going to be a psychologist, an economist, a public policy analyst, a philosopher, an ethics person, a humanitarian, a voice for the people in the form of a medicine man from the Lakota Sioux. Mike Three Bears is the personification of that. A systems thinker who models the habits, skills, and attributes of somebody trained at the Waters Center for Systems Thinking. So for each one of those profiles, I got about half a page of these are the things that I want this expert to consider whenever they're looking at the problem that I've given you, and they are to run it through that filter and then give their input to the chief of staff. And the chief of staff is going to have the following sets of criteria. And then, so whenever I ask it for that kind of advice, the chief of staff routes it through all 20 of those, consolidates all the input from the staff, and picks the ones that are the most important in his judgment towards what it is that I'm looking at. But everybody gets a voice. So I have that in a library file. So I upload the context of the audience and the staff in a library every time I have it evaluating anything for Army work. And then what I do is I said, now, given that as the baseline, here's the issue that I'm interested in. And then I will go through a series of questions to find out, hey, identify the leading thinkers in this area. What are their big concepts? What are their blah, 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 blah. Now evaluate this idea through that lens and tell me what it is that we should be thinking about. And so that takes the form of an iterated, almost Socratic dialogue that leads me to a really good essay at the end of that thing. When I wrote the book on prompt engineering, I basically started with that and said, what is it that what are the top things that a busy professional needs to know about prompt engineering in order to be effective at work and to use the tool in a professional manner? So it gave me an outline. I said, bang.
Cool.
Well, this weekend, I was going to do that presentation to Chris White's audience on the swing trading. And I thought, if you believe in Sun Tzu, what you want to do is see the battlefield, see the enemy, and see yourself. I said, well, what is it that a well-skilled opponent in the market knows about swing trading? What is it that a person who meets my criteria of a professional trader, what is the common knowledge of a well-educated swing trader? So it gave me an outline with 14 chapters. So I had it write the book. I got a 200-page book now on swing trading that contains, in my view, the common knowledge about swing trading. Now, there's things that I do, that we do, that goes beyond what is contained in that book. But that's a pretty good place to start from to get a insight into what the guy on the other side of the trade knows. And have you considered those things in the formation of your trading plan and all that other jazz? So I ended up spending a little less than 3 hours writing a book on swing trading. I mean, that's ridiculous, but there it is. So I got to get that published this week and get it in there. So, the project that I was working on with that staff was to figure out what were the 20 perspectives that a general officer needs to take into account when making a decision that has long-term implications for a large organization over long periods of time. And then how to optimize each one of those and then write something for well, that causes you to think about the AI in a certain way. Um, there's three use cases for it. Use case one of is you ask the AI to do trivial things so you don't have to, hey, total up this column of numbers. Easy. Use case three at the other end is where you say, look, I don't know anything about this, so I'm just going to ask the AI what to do, and then I'm just going to do it. Okay, so that's stupid. But use case two is one in which you have a deliberate partnership relationship with the AI. And I think of it as the Pareto principle that I do about 20% of the senior partner work by defining the context, parameters, scope, limitations, output, checkpoints, and then define what it is that I'm looking for. I then have learned enough to ask it, have I been clear in these instructions, or do you need to ask clarifying questions? So 10 days ago, it used to have to ask me clarifying questions. It doesn't have to ask me clarifying questions anymore because I've incorporated that into the structure of my standard queries. But I still ask it, was that clear? And that's when I have sort of a structured approach to what I'm doing. There's another one where I actually took the confident communication model and I said, I wonder if I could turn this into a more general purpose professional development model, because I believe that our internal dialogue, that style, is the same style of communication that we use for the external communication in the world. And that the boundary between our internal world and our external world is our communication process. Well, if our internal dialogue, as we're thinking about what it is that we want to say, starts with our shadows and our instinct and goes up to feelings and instincts and then beliefs and then assumptions and then a formal dialogue where we're thinking about what we want to say, then we create a hypothesis and then we send that out. So we're going up the food chain, if you will, of this ladder of communications. When you're talking with yourself like that, is that a confident tone? Is that a regular process that you engage in? Can you handle uncertainty? Or is that an uncomfortable process? Is it a complete process? So it turns out that as I was articulating that, I was saying, like, if you are more confident, then you're going to be a better performer. And if you're a better performer, it's going to improve your feelings of confidence. So if you can see that connection between self-talk and your performance, then you're going to improve both of those dramatically. And that turns out to be the same thing that Navy SEALs teach when it comes to performing under stress. They have four criteria, four major elements of that: goal setting, calmness, focus, and positive self-talk, which I take to mean confident communications. Well, I wasn't very clear at the start of the dialogue that I had with the machine on where that was going, but as I started articulating it, those ideas were forming. So I was more like a randomized speech or a wandering story and thinking out loud. And then when I felt like I had squared the circle, I said, now take all of this, reorganize it, put it into hypothesis form, and ask me clarifying questions, because what I want to do is create this communications model that can expand into a performance model. It said, no, it's clear. Here's what you said. And it had organized that stream of consciousness into a pretty well structured argument map and cleaned it up and allowed me to then proceed into building out that communications model. Well, I did that in about 2 hours. I sat down at the AI symposium last week with a friend of mine who was a battalion commander, but who has since retired and is working with a contractor who owns the entire Army ROTC faculty and student development contract and has large contracts across the U.S. federal government for the development of leaders. And I briefed him and his VP of leadership, and we're going to have a meeting in another 2 weeks to talk about doing some contract professional development work for them under contract across the U.S. Army that includes our creativity course, the Fletcher treatment, storytelling, systems thinking, confident communications, and the use of AI. And so the 2 or 3 books that I wrote this week are going into production and are going to become part of that professional development environment. So, and all of that is shaped by that standing library of senior advisors with a good chief of staff to make sure that I'm not missing anything. So in conclusion, I would say the AI will surprise you with how it can engage in dialogue with you. And what I find that it does is it puts itself at the level of the questions that you ask. When I ask dumb questions, it gives me answers all over the place. And it can hallucinate because it's trying to figure out, hey, it could be anything. But when you are skilled at establishing the framework of what it is that you want to dialogue on, it can operate at the high graduate school level for analysis and synthesis, and is pretty damn amazing, I have to say. So that's my that's my conclusion on that. I'm gonna, because you guys were brave enough to take the coaching, I'm gonna give you the books on the swing trading, the confident communications, the was it the prompt engineering, just because you know.
That's awesome. Is the prompt engineering how you went about training the
Yeah,
AI and back and forth?
exactly. So I actually
I'm
had it.
really
Yeah,
curious
I
about that. That's
yeah.
wild.
So what I'm putting in that book is I had it do an outline of what, the 10 things that a busy professional should know on how to improve their prompts. So, and it had like a beginning, intermediate, and advanced. And then I'm also going to include 5 sets of the call and response iterated prompt engineering. Like I had it explore the idea of uh, compare the difference between a cynic and a skeptic and a naive optimist, and help me define the right habit of mind to have a positive thinking skeptic who requires evidence but is not cutting people off at the knees from cynicism, but also doesn't go overboard into fanboy. In other words, to be a good staff officer. So that's sort of, I had to do one on Socratic questioning. When is it appropriate? When does it not work? How would you know it's not working? And what's an alternative to it? I had it do one on systems thinking and storytelling because I have credentials in both of those things, and that's becoming part of a leadership development course that I'm going to sell to these 2 guys that are the Golden Key Group is the name of the group. So yeah, I'm going to include a bunch of those dialogues in action to show what that partnered use case too, where you have it essentially. I'd like you to think of it as a sculptor or a painter from the Renaissance, where the AI is doing all the heavy lifting. They're carrying in this great big block of granite and setting it up and roughing it out to your specifications, and then you come in and do the detail work, and so it's learning with you and helping you with make the good cuts and setups, and as long as you keep that relationship in mind between, and don't hurry it, but you ask 1-step questions, and okay, you gave me this, now I need that, I need you to rewrite this with this extra thing that just occurred to me because of what you said, and that kind of stuff. And then if you get that punctuated, iterated dialogue, you keep it from going off the deep end. It goes off the deep end if you've given it too generic of a point of view and you let it run amok. Now, I've also tested it on some quantitative things where I have done studies of volatility and gaps and all that for the last 30 years, and I study that nightly. So I just gave it some word problems, and the conclusions that it made about gaps and volatility were justified by the independent research I've done with spreadsheets and back testing. So it's capable of doing some pretty sophisticated quantitative analytics. I'm a little leery to trust it completely on that. I want to always check the numbers, but I'm really impressed with the model that I'm using these days is Claude 3.5 Sonnet, which is better than the Chat GPT 4.0 by a good measure when it comes to reasoning and math. And that's not even their best model. They have the higher level one they have is called Opus, but they haven't released that one into the wild yet. But yeah, Claude 3.5 Sonnet is pretty goddamn amazing, I have to say.
That's wild. Well, thank you for those. And yeah, I'm excited about that. I'm a programmer and the AI, I know it's
Yeah.
out there. I know I have to adapt, but I don't know how to do it well.
Yeah.
So I'm really anxious or not anxious. I'm looking forward to learning
Yeah.
that from you. So thank you.
Yep.
If it's cool, I'll just go ahead and start.
Yeah.
Since I'm already talking.
Mm-hmm.
Okay, y'all are seeing my screen.
Got it.
I'll make this short. What did I do? I didn't write 2 or 3 books this last week, but I did do some things. I met with Luke Crockford's Automated Trading System Group. I don't know if that's what we're calling it. 3 of the other guys on this call are on there, and
Yeah.
it was good. Thought it went well. We're still trying to figure out exactly maybe how we're going to interact, but there's a lot of synergy there. I think there's some good stuff. For those of y'all that were on it, if you haven't been able to get on Discord, shoot Luca an email if there was a problem. I think Juan had a problem. So just we're going to be on Discord here doing some stuff. I added all the profitable symbols from George's list of profitable patterns that he had sent out, which was Ken's list, as I understand it, and looked the same. What surprised me is I thought the PRX system would probably mirror, the SSC or CATA 2 a little bit. And it seemed like it was very independent from your stuff, George. Stuff that was profitable for those for you was not for me, and some vice versa. So systems are different enough that, that if I was to map it the same way you did, I would have had a lot of different results. Some were the same, but I would say almost half were not or more. I was looking there, so I went through whatever that was, 40 symbols. So I have 20 that I thought were profitable enough. I think that was a expectancy above 0.15, I think I was looking at, or 0.14 is kind of where I cut it off. So I'll look for those. I'm also looking for, again, non-correlated, less correlated. And then I started looking at the loss limiting measures for system 1, which we talked about last time. Ken, you gave me some ideas.
Yeah.
What will I do this week coming up? I'm going to take multiple days off from my day job. I'm in a situation where for the next 3 or 4 weeks, I'll be able to take 3 or 4 days off, I believe. And I'm excited about that. It's the first time I've been able to really spend a whole day working on this. So I'm hoping to make some good progress. And we talked about limiting those losses, looking at a weekly loss limit. Ken, I think that was your idea, which I like. I was talking about the slope of the R rolling window. It may miss out on that next big trade. That's what I suspect will happen, but I'll probably run it anyway. And then talking to Juan, he has found on his system, he used a different market classification than the standard one, and he said it made a really big difference. So I'm excited to try that. That's the RL30 versus the SMA. Juan sent me an email with some details about that, I think from Griff. So if anybody else is interested in that, there's a write-up on it that you can get. Yeah, exactly.
Yeah, when the RL30 crosses the SMA 30, the middle of the river,
Mhm.
that is clearly winter and downward bias. But when it reverses and crosses the SMA 30, that is really a big win. And it
Mm.
turns out this is early enough, like after the big COVID loss, there was still a 75% gain available on that recovery from the harsh sell-off. So that turns out to be, now you may end up getting a little earlier move with an SSC in here, but when the RL 30 crosses the SMA 30 after a strong move in either direction, that's really a change in season, and you really need to sort of respect the different regime that's in play.
Yeah, that makes sense. So I'm anxious to try that. Is just a different way to filter it. Maybe that will help pull some of those. That 1 week when I was looking at weekly results and showing it, I had a 28 R
Yep.
loss, something
Yep.
like that.
Yep.
And went back and looked at those trades, and over my 10 symbols, I had about 14 trades that week. Obviously, some were duplicates, and all 14 were losing trades that were false signals. So that's pretty rough to get all 14. So that explains why it's such a large R loss, and some of those other weeks were large too. So and again, it's good to see this. Looking at the positive, it's good to see this because even if I was trading just a handful of symbols that were mostly positive, like the cryptos, this is still a possibility. They may not have happened yet in those symbols, but I think programming it in is probably
And
why.
there may be a short-term opportunity system in there too that says when certain conditions are in play, the reverse side of that trade can be really profitable too.
That's a good point because that was pretty consistent to hit 14 in a row in a
Yeah,
week.
I mean, and for
That's
28R,
consistent.
we kind of would like that.
That's a great point. It's like, man, you're right. So yeah, there's definitely something in there, juice somewhere. And then again, also one that talked about exiting any non-profitable trades at the end of the day to limit gap downs. And then at the very bottom of the page one, I had actually written that down at the end of last week's call and forgotten it by the time I talked to you again. So I thought it was good last week, and I thought it was good when you told me again on the phone the other day.
Yeah,
So
while I got you, here's a research project I'm going to do with Edge Raider with Phil and Griff, and probably get Chris White, who wrote Edge Raider, to do. And we were looking at the idea of how did it close? How did the symbol close today? And then if you had something like the S&P 500, who were the best closers? And so I said, well, the way I would do that is, first of all, I want the biggest move. I want it to be a big move. So I'm going to take the high of the day at 100 and the low of the day at 0. And then I'm going to say that's a percentage. Right. So, well, actually, I want a big move and I want a strong finish. Yeah, that's what I want. So the strong finish, I'm going to take the high of the day and the low of the day, set that equal to 0 to 100. And then if it closed at the high of the day, it would get 100. And if it ran all the way up and then closed back a little bit, it comes back at 90. Well, it closed at 90 on the daily index from low to the high. And that, so I'm going to take the closing index, which is something like an efficiency scale between 0 and 1.0, and I'm going to multiply it by the range percentage index. So I'm going to take, for all the symbols in the S&P 500, which had the biggest percent move that day, close to close. So yesterday's close to today's close, because that's going to be the big move. So you pick the one in the S&P 500 that had the biggest move, and you say that's 100, and the worst negative move is a 0. And then you say, for this symbol, it turned out it was at 0.75. So it was at the 3/4 mark on the size of the move, and it closed at 90. So I would just take 0.75 times 0.9, and you get something like it nets out to a 70. So I'm going to play with that, and then I just have Edge Raider determine, is there something like a overnight gap holding criteria that if this thing really closed well and it was among the best performers in the S&P, is that the criteria to hold it overnight? So that's the kind of brute force structuring we can do with Edge Raider. And I just wanted to share that idea. I just had the idea today. So I'm going to be testing that as a way to, because I've been going just by intuition right now. Hey, it was a really good move. It closed very well. I've got markets money. I'm going to keep 20% of it overnight, take the other 80% off, and be ready to put it right back on. So I'm gonna try to calibrate my intuition on that to see if that works or not. So more to follow.
I like that a lot. It makes a lot of sense, but we'll see. Okay, well, that's pretty much it for me. Again, thanks guys that were on the call, and thanks Juan for sharing other stuff with me. I appreciate it.
I can go next.
Jonathan, go ahead.
I don't have a whole lot to report. So last week my brother was in town, so I didn't get a whole lot done. So I only traded on Monday morning and was back trading this morning. But as I mentioned, I traded to 3-minute time frames for the first time this morning. So I was excited about that, and been creeping up, kind of inching up my position size. So one of the things that I've noticed is, you can tell me if I'm right about this, but when I'm trading the 3-minute, in relation to the higher time frames, I have possible support resistance points that I'm watching for the 10-minute, the 30-minute, and then I have the daily high and low, and the 5-day and the 10-day high and low. But really, once you get above the 10-minute time frame, the immediate higher time frame, it doesn't really seem to matter what the higher time frames are doing. If they're in congestion or moving sideways, they may really look like nothing, but there's great moves on the 3 minutes. So it seems like it makes sense that, having a smaller handful of stocks that have the characteristics that you like, and that, they're good day traders, really probably is more important than spending a lot of time, kind of not to not look at it necessarily. So there may be, critical overlapping critical states or things that are important, but whether they are or not, you can still get great moves meeting your objectives on the 3 minutes when the higher time frames really aren't doing very much. It's just kind of noise.
Yeah, I think what happens is that each of those time frames treats the lower time frames just as noise, so they don't act on it. And that means that what's noise for them is the routine trading moves of the lower time frame. But if the higher time frame guys don't have a reason to come in and act, there's a self-limiting function based on how many players and how much capital they have. They can move it this far routinely, and then it just dampens out. It's not until those higher time frames are also in a compound critical state, which triggers them to act when otherwise they wouldn't act. Like maybe it's a breakout of the high of yesterday's high of the day, or a new 10-day high, or a new 30-day high, or the corresponding breakdown. It takes a signal on that higher time frame to cause them to go from observing into acting. And that's where you get these compound critical states, the large moves. And that was one of the things I talked about in the briefing with Chris White this weekend, the idea of the compound critical state. So my view is that for the intraday targets, that if you think on the daily report, there's that frog list of trading value that I use, and it combines two things. It's a large average intraday range. So just high minus low divided by price as a percentage. Go back 30 days. What is the average range percentage of the last 30 days? So you want large average range. It's moving a lot compared to its price, compared to its partners. The other thing you want is a high frog quality number, which says that it is reliably moving those large ranges. Like if you had one day it moved 40%, and the other 29 days it moved 1%, that unusually large range day would inflate the range, but it's not characteristic. So the frog quality number takes into account the reliability and the normality of those large moves. So what you want is something that always moves a higher average range percentage than other symbols in its peer group. So that's on the daily report. I always highlight the top 10, and the ones that are always in there of those 60 is like Tesla, Nvidia, marijuana, clean energy, regional banks, Alcoa and Nucor. I mean, it's just that's sort of what you want to, what I believe you want to look at. The other way to look at that too is on the daily report, the signal to noise ratio. So if you take the real body of the daily candle, that's the net from open to close. And that's the percentage of the real body divided by the total range tells you how much of the day's range was directional, right? So if you had a doji, that means it opened, it ran all the way up and it ran all the way down and it closed even, it would have a signal of 0 because the open to close movement was net 0, but it had really big wicks. That means there's a lot of noise, but low follow through. So all other things being equal, what I want is something that has a very high signal to noise ratio that starts low and finishes high, or the other way, starts high and finishes low. So those two pieces of the daily report kind of give me my daily review of the things that are behaving the way I want. On the weekend report, I do the thing on the liquidity, which takes the top 30 most liquid ETFs, the 30 ETFs that have the highest 30-day average daily trading volume. So I want something that's the most liquidity. And then I compare that on the basis of ATR percentage, because those are the ones that I want to swing trade. And the ones that really stand out are both liquid and large ATR percentage. That's a great swing trade. Right now, those are gold miners, semiconductors, biotech, regional banks, energy. So you could do worse than trade. I always love seeing the energy sector in there because that's what I want to see, something that reliably oscillates. I don't need large, go from 0 to infinity. I just need something that on a regular basis acts like a carrier wave that has lots of amplitude and lots of frequency. That's what energy does, XLE. That's why it's on my short list.
Well, the ones that we've sort of focused on, EWW, DIA, XLE, XLI, XLF, we've kind of talked about the smoothness of the move, maybe how easier
Yes.
they are to trade versus
Exactly.
the ones that are the high TVR that you've got on the report. I haven't really spent any time with those.
Yeah. Those,
Are those going to be a lot choppier? Even
those,
though
they can be. As an example, if you were just to compare the US indexes,
okay.
DIA is very smooth. It doesn't have as much range percentage as SPY, the Qs, or the Russell. It has a smaller range, but its characteristic move is a lot smoother because it has 30 great big fat mega cap companies that are slow to move. And so their aggregate move is, it may be smaller amplitude, but the smoothness of the curve compensates for the lack of absolute range percentage. So a 2% move in the Dow might be a very, very smooth and orderly 2%. You might get one trade with 2 or 3 positions. Whereas that same 2% move in the Dow looks like a 3% move in the NASDAQ or the Russell, but that might have 2 or 3 legs where you're in and out because of the chop and it oscillates more on the way up. So the broad indexes that are more typically day trader targets tend to be choppier because those guys are firing on 1 minute and 3 minute and using a lot of leverage, and they're scalping. So you see a lot more scalping on those, which gives you a lot more oscillation inside each bar. So in my view, I would rather have the slower, smoother moves of DIA and EWW and EWZ, because they make large moves, but they tend to be more purely directional. Once they get going, they just go. Whereas IWM will give it, like, it has a lower signal to noise ratio. Like, it may run to a certain height, and then but because there's a lot of leverage in there, they will offload that and it comes running all the way back to the VWAP. So you don't get a large signal to noise ratio. You get a lot of travel time, but you got to be more adept at stopping and reversing. Whereas in my view, I would rather just go after a slow moving large cow like DIA. I'd like to move that large herd of large land animals slowly
Right.
across the pasture.
And the
And-
ones like NVIDIA and
Yeah.
marijuana, some of the
Tesla.
ones that have the high TVR, they're going to be a lot.
Yeah,
choppier.
they tend to be choppier because I think there's a lot more emotionality in them because, but NVIDIA, because there's a lot of fanboys that are day trading it and slinging it, and they're using fear and greed and fear of missing out and all that shit. And so that tends to be choppier and gets moved by news. Whereas, so that's why it's choppy. Marijuana and clean energy are choppy because they are so narrowly traded. It is a very niche sector as an ETF. So you have many fewer participants. So there's fewer people to change their mind. And if a major player there changes their mind, you can get that thing turned sharply. So you got to be careful on those. Whereas DIA is this great big herd of 30 bison, 30 adult slow moving bison. They're just, but there's a certain inevitability about the moves in DIA that I really enjoy. And then to me, Mexico and Brazil have the characteristics of a large national ETF, but which is immune from some of the more active trading that's going on inside the US market. So it's almost to the side, and it combines large volatility and good volume, but also a smoother moving. So that's why I like those as sort of a sideline. Nothing to see here, just large, steady directional moves every day.
Well,
That are independent of the US.
Well, I'd rather have something that's smoother like that, so it can be more consistent and have a larger span of control rather than having to stare at something that's going all over the place. And
that's right.
And
yeah, I mean, the extra chop, you get larger percentage moves in some of those choppier symbols. But if you want to stay in the trade, you have to have a wider stop. So it nets out to, like, I have a smaller position size, but I have to watch it more closely, and that's 2 strikes against it.
Well,
So the ones I've been recommending to me favor that kind of more of a calm directional intraday trading. DIA, Brazil, Mexico, marijuana, that kind of stuff. Energy.
Okay.
Cool.
Great, thank you.
Let me ask you one final thing on as you had taken a few days off and you came back on. Now, were you able to kind of get reconnected to your trading process more quick in spite of the days off? Were you able to kind of pick it up and get going more quickly this time?
I was
like back into a few practice swings and let's go, as opposed to having to say, how do I trade again? Yeah.
Well, I still had a little bit of that, but not quite as much. It gets better every time I take a break and come back. It gets easier.
Okay, cool. Yeah, those are pretty good looking trades from today.
Right.
Yeah, that's a good day at work right there. Okay.
I
George.
can go.
Okay, George.
So I haven't been doing any manual trading. I've been focused on automated trading. I settled on these targets for back test and forward trading, which I started today. And today I got let's see, 55 trades. And I guess we can kind of go through them. Let's see.
Yeah. Yeah, I'm looking at win rate of 0.36, 2-to-1 average win to average loss. Yeah. That's on the slightly favorable.
Yeah.
I still think there's
Yes.
work on the exits.
Yeah, I did work on the exits quite a bit, and whenever I added an exit rule, it actually made the results worse.
Hmm.
But
I
guess,
don't like that 2-hour trail though. I just something about that.
yeah, I know. So I've been working on different ways of improving it. But I'll keep on working on that. One thing that did work was adding to our battle drill that
Yeah.
significantly improved the results. So I started trading that.
Yeah, there's my good old friend International Paper, the absolute opposite of yeah, average 0.75. That's your best number, best efficiency, best SQN. It's the most boring company in the most boring sector in the world. International Paper in a digital world. So yeah.
I can show you today's trades. Sec.
You know, and for 3 weeks of trading, you know, to be up plus 30 over 3 weeks, the little incremental advantage, you know, adding pieces and collecting them, that's pretty good.
So today traded 6 symbols. These are the symbols that I decided to trade. Today wasn't very profitable, but that's okay. And yeah, that's about all I have really. I'm going to plan on continuing to focus on automated trading, work on the exits, and I think it's going to take
Yeah,
at least
I can't see where was the exit on this trade?
this one.
Yeah, is it hidden behind this? Is it in there some? Don't tell me it's up in here.
I think, let's see.
Because this looks like the 2-hour battle drill.
It's actually behind here.
Yeah, that's probably in here somewhere.
Yeah, it's right there. It's behind that.
Yeah, see, like on this one, to me, as soon as I put the 2-hour battle drill on, that thing's supposed to go right away. And if it doesn't, I get all out right there at a scratch on the second one and 2R on the first one,
Yep.
which is the difference between, but if you let that second trade and the first trade go to a full -1R, you end up losing 2.2. At this point, you were +2, you had a second position, and it ends up becoming a wash trade. by allowing the second trade as much room as the first trade. When it doesn't work, it negates the advantage of the first trade altogether. So that's why I'm saying the effort on the exits is warranted. And then on this one, if that's an entry and it gets to here, and then this is the 2R exit, it kills me to have a trade that is plus 1.5 and then let that go a 2R this way and then let that become a negative trade. And then to be this far in my favor and then to have it scratch kills me. That's what the trailing 2R stop does.
Yep. I did test exiting at things like the BB mean. I did a time exit where if
Yeah.
it doesn't go within 5 bars,
Yeah.
Closing it. What else did I do? I did a 1R trail. But I guess I'll just keep working on it.
Yeah, I mean, your average win, here's something to look at, is your average win in that rule set is 1.7. So when you get an average trade of 1.7, your 2R trailing stop would actually allow your average trade to end up being a minus 0.3. So that can't be good. So I would just have a rule that says if you got to 1.7, I would lock in 1.0 for sure.
Okay.
And then when it grows up to 2.0 and now you have a full R, then trail with an R or something like that. Or I would lock in 1 and then trail with half an R. And I wouldn't do the 2R battle drill on the symbols that you have. Because the probability that you get because remember, if you have an entry here and it gets to 2R and you add a second position, that means that means you have to have a 4R move before the second position gets to break even. Right?
Yeah, to lock in.
Yeah. So, and then if you let that whole position come back 2R, that means you lost 4R out of a position that was up plus 6.
Yep.
That would absolutely horrify me.
Yep.
Because it's not usual to be able to see an uninterrupted move of 4R in a row. I think the 2R battle drill actually hurts you when if you're using a 2R trail. Anyway, keep working on that.
Okay. Yeah, I'm not sure what the best way to sort of represent the results, but maybe I can put together a report or something.
Yeah, I think what you got to do is you got to make sure that you're using the same set of initial entries and then testing to see how the different exits work on that. Like you got to, let's say you had all the trades of this month, if you can, if you knew where all the entries were, and then try a different, if I have a standard set of trades 1 through 30, and I have exit rule set A, B, and C, then with the same start point, I can see what changing the rules do to the results. And then I can determine from that which of those 3 I like better.
Yep.
And then work on refining that. But you can't take one set of 30 trades and then take the next set of 30 trades and see what those results are and say, well, with this new set of rules on these trades, it's better than those trades. You can't compare it that way.
Right.
You actually have to see how it behaves on the standard set of entries. So
Yep.
I would start with the 1R trail at 1.7, just tighten it up to a 0.5R trail.
Okay.
That's what I would do. I would try that. And then if you get a 2R battle drill, instantly I would go to like a 0.5R trail.
Okay.
So that you don't give back too much of a really good move.
Okay. I'll do those tests and put together the results.
Okay.
Thank you.
All right, Juan Carlos or Sundeep, who's up?
I can go.
Right.
All right, so I continue investigating trade by trade, understanding the whole deal. And what I found was that the RLCO trades are, at least on the 30 minutes, are incredibly profitable. When I corrected the bugs and got comfortable with what the system was producing, I got this. Let me share my screen. Where is it? Stop video whiteboards. Ah, here it is. Screen. One. So I've been playing with filters now. I was able to separate the, let's say, the good trades and the difficult trades. So depending where the price is in comparison with, meaning that when there is retracements, we know the SSC on the coming back of a retracement, that's the place to be. I'm talking about the daily, but trading in the 30. So when there's a big retracement on the daily, getting in the 30, it's really good. So I'm getting this type of numbers like 2.5 to 1 and getting profit factors of 2 going that way. If I include filtering with the MA30 and the LR30 and the SMA30 on the 40 symbols that you usually used for when you were trading the 30 minutes on the swing, I get this type of results, which need to be filtered, need to be worked on. I'm not planning on letting this loose, but this is incredible.
Yeah, I mean, your win rate was about 0.45, but your win to loss ratio was almost 3 to 1.
Correct.
That's a coin flip that pays 3 to 1. Yeah, the 30-minute bar to me, well, you watch me trade it every day for 2 years. I love the 30-minute.
Yeah, like the weekly results, it's like incredible. So I started looking at the areas where I was getting or accumulating the losses. And I found that so this first one is just the good trades. This is when the LR30 is above the SMA30. So I allow that to work without restriction.
Yeah.
But then I separated the bad trades. But in the bad trades, I get the biggest trades. So I have to be careful on how to try to maximize the big trades and minimize the small trades. So that's the area I'm working right now.
Yeah, what you got to watch on that one is when the RL30 is below the SMA30, you'll get a big trade when you have an SSC that works. It's the first dead cat bounce, but when it doesn't work, it fails into a collapsing dragon. So the SSC is brutal in the sense that when it works big. So you want to believe in it. But what really helps you in the long run is the COTA 2. Because you get, when you have an SSC that works, then that's going to end up turning the SMA 30, and then the RL 30 will be over it. And then you get COTA 2s all the way up. The moves are smaller, but they're more of them, and they are higher percentage of success, but smaller payoffs. So it looks like, let's see.
So yeah, these are the
Yeah. So when the RL 30 is down and it's below the SMA 30,
correct.
and it makes that move, you get that first SSC off the bottom. When it works, you get a big move, and then you get a series of smaller COTA 2s. So this is where you get the good win rate, but the size of the move is smaller. This one has a lower win rate, but when it works, it's a big win. But when this one fails, you're into the collapsing dragon, and you'd like to have that because that is now following the primary trend. So there's a couple things going on inside those numbers.
Yeah.
What it means is that you should take the SSCs with a strict risk, but don't believe in it and be ready to cash the win.
So yes, and this is no filter. This is all the trades all together, which is not bad. Like 2.4 to 1.
Yeah.
And 190 on the profit factor. It's pretty good. So I'm very, very happy with this. I'm supposedly had to start a trading, but it's not working on my side. I got my remote desktop set up over the weekend, so I already have a place to run it. So I'm ready to go there.
Yeah, so you got a 0.44 to 0.56 win to loss rate, but it pays 2.5 to 1.
Mhm.
So that's like a 9 to 5 payoff ratio. That's pretty good.
So when I'm designing this, what is the objective? More trades or better quality trades?
I think I personally like more trades.
More opportunities.
And the reason is if you are aiming to get more trades, you're going to get the better quality trades anyway, because you're taking more signals.
Mhm.
As long as the equity curve is smooth, I want more trades because then the individual risk per trade can be smaller. Each one is less full of anxiety. Because I have 100 trades that are all doing the work instead of trying to pick and choose the 40 that work the best. You know, now and when I narrow it down to 40, what about the 60 that I miss? What am I missing? Whereas if I've got positive expectancy on a larger number of trades, I would rather have that from a diversification perspective. That's my personal preference.
Okay. Cool.
Part of that also, you know, as long as you're not violating span of control, and
Yeah.
as long as the admin cost of the trades is not killing you, you're okay.
Cool. So yeah, well, the last one, which is just plain interesting, is that filtering out based on the SMA 30 and the LR30, but not on the symbol, but on the
Yeah.
sign,
Yeah.
gave me also really good results.
Yeah, it increased the percent profitable. It improved this ratio.
Yes.
That's
It
pretty
took
good.
away like 30, 40 trades.
Yeah.
You know.
Yeah, I mean, that's really good. That's really a coin flip. That's paying 2.5 to 1. That's amazing.
So yeah, ready to start trading this. I already have everything in place to get it started and move
Yep.
on to the Kata 2 investigation.
Let's go.
Oh.
Okay, Sundeep.
Okay, all right.
I love that you have a whiteboard on your wall.
Yeah.
I'm known
it's,
for those.
I love it. I mean, I'm such a visual person. I love having a whiteboard and standing, thinking about it. So I'm here in terms of what I wanted to discuss. So Jeff set up the auto trading working group last week. That was good. Thanks for inviting me. So I'm spending time. It has been a goal of mine, but now I'm getting a little bit of a boost to get going. So what I have today is I have all of your patterns and systems, and I can not yet execute, but I can automatically do the analysis of all the trades.
Yep.
The question where I am at is, and I have a bunch of these stops that I've been playing with, including the jump stop, not yet ready to share results, but it's all pros and cons. Ultimately, it's a trade-off. I think I'm stuck at is I need filters to Juan Carlos's earlier point. And in particular avoiding the chop, the sideways chop. So at some point, if not today, maybe next time, if you can do a refresher on sort of, I would say, reconciling the two points of contention. One is you've said that they all look the same leaving the station, so you can't really know until you're in the trade. Yet at the same time, there's a bunch of SQC patterns that in hindsight look like, yes, you should have stepped out of it. But how do you know that when you're in the trade?
Yeah, my thought on that is the essence of the SSC is that you have to give it the harsh winter trade. You know, because if you're trading inside the chop, all of these might all have failed on the short side and stayed in the middle. And then the one you didn't take is the one that breaks out. When you have this move that terminates right here and the R10 reverses, you can say, oh, that was a harsh winter move from here to here. That thing is in play. And if I just give him that move, and now I'm looking at the SSC right here with a small risk box. If I get a reversion of 3 back to the chop, or if it fails, it's going to go another 3 as a duplicate. One of the ways to avoid the chop is to let it clearly give the first mouse the harsh winter. Say, hey, well done. It's in play. And I just know that once those guys had their way and they feel full and the buyers come in, it's either going to do this or it's going to do that because it's in play. Because all the guys that won on the way down are emotionally committed. So they're energized and activated. And then the buyers are guys who are motivated to buy on sell and to get the reversal, or they're the guys who lost money on this and are trying to buy on a dip and average in. So both the buyers and the sellers at this location after a harsh winter are emotionally energized. And that means that this follow-on move is going to be an energetic move. It's not in the chop. It's at the first resting point after this large directional move. So it's not chop. And it should work right away, either recovery or continuation. And that's the main idea behind the SSC. So instead of trying to stay in the chop and pick the one that's right, you say, I'm going to give you the first move. When I can see a harsh winter move that is non-controversial, that's like everybody would agree that was a large move, then you're okay. Then what you can do is you can say, look, after it makes the harsh winter and then it maybe makes 1 or 2 up and then it comes into the chop, you can't trade the chop until the Z3 lines compress to less than a frog box. Then you have an abnormally compressed chop, right? You can only get that if this thing was choppy and never broke out for an exaggerated period of time. And the fact that both of the Z3 lines are inside a frog box says that thing is sufficiently abnormally compressed that now you can trade the breakouts of Z3. And what you get is this. You got a frog box that looks like this. You have the Z3 line compressed to here and the Z3 line compressed to here. And what you're trading, the breakout is the breakout of the Z3. So it's one of those moves. And you use the entire width from Z3 to Z3 as your risk box. And as soon as that breaks out, you get your stop up into here. And that will, so you can trade the chop, but only when it becomes abnormally compressed. You have to stay out of it when those Z3 lines are still converging, but they're wider than a frog box. You have to stay out of it. You have to wait for the frog box to be able to straddle the Z3 lines. Then you can play the breakout. So the two things, you have to wait for a harsh winter so that it's in play, or you have to wait for it to chop abnormally tight and then play the breakout of Z3. That's the only way that I can do that.
Okay.
Otherwise, you just you'll burn out your neurons. I don't care how deep your pressure well is, 6 or 7 failed breakouts from the chop
Yeah.
will burn you out.
Okay. And one
Yeah.
question on when you have the little flips, right? So there's a move that's gone up, so the PSR has been long, and then there's a short, 2 or 3 dot short version of the PSR, and then a long version before. So it's all, you don't know yet if that's chop or that's going to go. So is the decision criteria what's above it?
Yeah, I mean, yeah, that's if the frog box looks like that, and say the Z3 lines are like this, what I really want to see is, prices moving around, but I'd like to see the RL10 even inside that little thing look like this, where I can actually see a low and a higher low on the RL10. That makes me feel pretty good about this breakout right here.
Okay.
I mean, you wouldn't be wrong waiting for the frog box to be violated too. If you do that, you can get long at the frog box, but then I would take half a frog box as the risk. But you'll get a tighter entry if you take the Z3 instead of the frog box. And then on this one, the Qs and turnaround Tuesday, if you know that like tomorrow, what I'd be looking for as an example is, here's the close today. If there was a gap down, a quick sell off and a reversal, I like buying the new high of the day with a risk box to the low of the day and just try to get that as the earliest entry. That's I like that one because you get the combination of the gap down is running the stops, and then you had a quick turnaround, and that looks like buying pressure to run it the other way. And then just like half a frog box or an R10 off the bottom. And I'm usually ready to go with that as a morning hook. The sooner that happens, the better. I do that one on 3-minute bars.
Okay.
And the Qs and IWM are both liquid enough that can happen regularly.
Okay. Yeah, I mean, I was surprised to see some backtest on the Qs with that internal bar strength, which is why I put it down, because you were talking about it earlier, looking at the close relative to the high and the low. But that backtest is pretty amazing. It's very high accuracy, 70-80% accuracy.
Yeah, I mean, it's it needs more. I think it's like the carryover psychology. What happens is if it closes really well, closes in the high of the, especially if it's above its VWAP, right? Where you see that is like if this was the daily range and the VWAP, let's say maybe it was a gap down. Here's where it closed, and then it gapped down, and then it spends the day getting better. But then price does something like this. And then in the last little bit runs up here and it closes up here. instead of coming back to the VWAP like the VWAP magnet, they decide to hold those positions overnight. That means that they're not getting out of their leverage positions, that they're betting on that this was the first day of turnaround momentum, and that there's going to be a bunch of guys that see this nice move and are going to buy at the open, which is going to drive the opening price up. And then these guys get to collect that gap. And then if they had to, they'll just run that. And then as soon as they start seeing it stall, they exit quick. So one of the plays in the morning is on a big gap up that peaks early and there's your gain stat. And you play that as a return to the opening and then a closure of the gap. And that could be halfway to the gap and then all the way. So you get 1, 2, 3 legs of a move after a big gap up. I see that one a lot. So,
Okay.
yeah. So the Qs and IWM are a good one to play on that because they are such liquid traders. And that's the point I would say to Jonathan's question. IWM and QQQ, you can see a lot of moves like this all day, and it's net up, but a lot of volatility. Whereas DIA might have done just kind of very orderly. Doesn't give you the big burst, but man, it's like irresistible momentum. Smaller percentage move, but a steadier move. I tend to prefer those.
Mhm.
I would just commend to you guys, take a look. We're just about out of time here. So I commend to you the monthly report from Hamad. It's on the Patreon. It's really well done. The way he's got that structured with the way he commits, he does a narrative as well as the control charts, but he's putting it into story form. That's part of the confident communications model, is listening to yourself describe your own behavior in public confidently with the language to do that. There's a certain the communist re-education camps and the self-confessionals in public, there's a certain amount of that brainwashing going on. It's really you getting your communication circuits right. And what it's doing is it's allowing you to use professional language. So instead of things being down here in the shadows, and then it slowly becomes feelings, and then images in your mind, and then beliefs, and then assumptions, and then habits and hypotheses, and then assertions like that. You just start, that's a communication process that as you are starting to able to name, explain, and demonstrate those things, and you normalize that, this is where the emotions, too much positive, too much negative, are living. As soon as we can kind of normalize that and make it subject to professional behavior and discipline, that's what confident communications is doing. It's giving you the confidence to say, hey, I'm the master of this domain. I have named my dragons, and I'm using the energy to propel my system. The monkey is pedaling, but I'm driving. That kind of mindset. That's why I think the confident communication model is more than just communications in public to others. It's really modeling and normalizing and improving the process of cognition. You're storytelling to yourself that's persuasive to yourself because it's based on evidence. And now you're not just woofing. This isn't just, well, if I repeat this mantra, whether I believe it or not, it's going to program my subconscious. Really? Is that what it's doing? You going to bet the farm on that? Or are you going to base your story on actual evidence and commitment to facts and things like that. So to me, I'd rather have that second one. I don't mind the affirmations. Like, let's go, slap your thigh, let's go for the next round. But when it comes to longer term commitments, I'd actually like to have a little more than just, you know, knee jerk rituals. I'd like to have some basis in science. All right, guys, that's everything we got for today. Good work. We'll get this published and posted and see you shortly.
Thank you.
Thank you.
Thank you.